Every time I've seen this in history where people expect or hope for a final flush out of weak hands before we get going, Bitcoin tends to do the opposite. So stick around on the video here, hit the like, subscribe if you're new, as each of the day's analysis builds upon the previous day. It's your home of macro cycle analysis. We're covering Bitcoin, crypto, stock markets, and the real estate cycle. All right, let's kick it off. On X, I've just said this morning, impatience is the killer of all investors. Enjoy the slow grind up. So there might be some impatience from people hoping for these big God candles, these things where Bitcoin just explodes to 80, 90, $100,000. That can happen, but I just wouldn't expect it the next day. Just enjoy the grind up here. We've been following and watching for the low pattern to form. And underneath 60 grand has been that key area. And now you can see that Bitcoin is finding a lot of support there and basically bouncing from that point. Now it's $69,000. So enjoy that grind. Things are going to get pretty crazy. At least that's what I can see from the markets. And in those times, then it's really important to basically keep yourself grounded, because that's where you got to start making your money. Don't get swept up into the nonsense that goes on X and YouTube and all your mates and all this sort of shit where people are saying that markets have to keep going up. That is going to be the time that gets very, very serious, because you want to make money this time and you don't want to leave it into the markets. So that's what I'm here to hopefully help out with basically just keep a level head. Impatience is a killer. Have your plans going. Let's move on, because we're seeing a lot of other new all-time highs, which of course is starting to flow back into Bitcoin and cryptos. The stock markets closed out another week at a new all-time high. This is the S&P 500. However, I've got a couple of things to get through for S&P for this month. We might see a pullback just based on historic patterns. Looking at this particular one here, which basically failed to a degree, looking at elections here in the dotted lines, suggested that the October was going to go lower. It wasn't going to be an Uptober or a Pumptober or any of this stuff that people are talking about, but just looking at the data, it was saying that we were going to see lower prices. However, S&P 500 has been up. The Dow Jones hit another new all-time high on Friday, and in pre-hours right now is getting very close to hitting another new all-time high, just 5 points off a new all-time high. But what I'm looking at here are the seasonal patterns around now. We're at the 21st of May, and you can see here around the 25th. And if we look at the solid lines, you've also got another dip around now, 21st, 22nd, another slight higher dip around the 29th, and essentially away from that point. So all I'm looking at here for this week could be some slight corrections in the market before we start to head to higher prices. Now, if we do see the markets drop this week, basically 2 weeks out from the election, possibly just another minor bump in the road before we get to the election. Now, the NASDAQ is 2.4% away from another new all-time high. As I said, the Dow Jones is at a new all-time high. The Russell 2000, the smallest 2000 stocks in the US, at least on this index, are getting close to another fresh high, basically 2,300 points, well above the 50% level. So basically in that solid uptrend, getting close to breaking 2,300 and then getting, trying to tackle the next new all-time high. As I said, when markets get into new all-time highs, it's not a time to be shorting them. And I suspect it's going to be more of the same, more of this money flowing out into Bitcoin and cryptos, which is currently what we're seeing with Bitcoin. Now, in terms of the volatility for the stock market, it's on its way down again. There's been a few little bumps in the road here, but it seems like it's coming back on track like it's done every other time. We've seen pretty significant volatile moves. We're also seeing new all-time high prices for the Home Builders ETF. It closed out on a new all-time high price. It touched a new all-time high price. The weekly chart was another new all-time high price. The market is still seeing more profits for home builders in the long term. Stock markets, they say, are roughly forward-looking 6 to 12 months. So if that's the case, real estate will likely still be seeing higher prices over the next 6 to 12 months, 2025, which, as we've been saying on the channel, I think is going to be a pretty significant year for all of the markets. We're also seeing higher prices for Australia. Here is today's weekly bar start, basically at new high prices. Last week closed out a new all-time high. Canada New all-time high week after week after week after week. The top 50 in Europe trading close to their highs again, highs of the last 24 years, getting very close to breaking to a new all-time high, which was set back in 2000. If we're just trading markets, putting our money into markets, no matter what the inflation is, you're going to lose your money if you're just holding it. It's got to go somewhere, and that's what the governments have done. They basically said you need to put your money somewhere in order to stimulate the economy, stimulate the markets, keep pushing prices up. So I know there's always an argument saying, well, if you adjust for inflation, the prices aren't going to go up. Well, no shit. But if you adjust for inflation, the cash you're holding in your bank or in your hand is also going down. So do what you need to do with that money. Now, the UK trading very close to new all-time highs again. We zoom in. The weekly close was the 4th highest in history. Germany, you can see it for yourself, new all-time high, broke past the 100% level here of this particular range. France, also doing well, closing high again. Italy, getting very close to another fresh high here, and this is pretty crazy. Top there in 2000, next top in 2007, so that was the previous cycle, and is now breaking above the downtrend here. Finding support above that downtrend line, which could mean it's ready to go for another run up to the 40,000s or 44,000, something that it hasn't seen since 2007. China, which is also showing some strength after huge pump ups, closing above 50% levels. So this is really important for the economy overall, and obviously what we're focused on, Bitcoin and meme coins and all that sort of garbage. More money is coming into the system. It's being printed everywhere, and although you're seeing big spikes, the support levels are still being met. So we always see abnormal moves, almost always, and then they retrace. That's pretty typical because you got all the late buyers coming in. These guys are selling out, taking their profits because they might be shorter term traders, but what you want to look for are closes above key support levels. So there are some previous tops, some more major swing tops here, and we're getting closes above those levels for now. Japan also trading near highs as well in their stock market, and India also just holding up after a couple of weeks down. So emerging markets also doing relatively well. The US dollar closing above 50%. So it is looking relatively strong, yet asset prices are also going up. So my view for the US dollar is we'll eventually see this break down from the 99 to 100. This move over the last 3 weeks has been very strong. So very good, at least for the US dollar. And asset prices have continued to show strength in the face of a rising US dollar. Well, at least in the case of the stock markets, Bitcoin and other commodities like gold breaking into another new all-time high. So when the US dollar eventually sees some weakness, maybe we'll see things spur on even more for asset prices like Bitcoin and other commodities. Gold, new all-time highs, all-time high close here. Silver, $34 an ounce, new fresh highs that it hasn't seen since 2012. So we're going back nearly 12 years now. So new fresh highs there for silver. And copper, something that is used very regularly, well, a lot of in the economy, is also trading near highs as well at $4.40. So that leads us over into Bitcoin and crypto. We've done a pretty substantial recap of the traditional markets, commodities. Things are still up. We haven't seen any sort of signs of breaking down. The fear and greed index here for crypto, 72, and basically just flatlining here in greed. So not a bad thing. We really don't want to see it creep up into extreme greed and remain there for too long, because we'll have to see a bit of a pullback from that point just to reset the sentiment, but nothing too out of the ordinary here, apart from maybe leaning towards a shorter term pullback, which might also go in line with something that might be happening for the S&P. But I try not to get too swept up in the shorter term stuff. So I just think it's a little bit harder to forecast. And at least for my trading, my investing, maybe yours as well, you're looking more long-term. You might be looking out sort of 3, 6, 12 months from now, as opposed to trying to trade day to day. Nonetheless, reasonable things here for the stock market, for crypto. The exchange volume also relatively low, yet prices are going up. So another good sign here. 12 months ago, we saw the same thing. October, very low trading volume, yet the prices were going up and they were breaking out, and they did 200% from that level. The search volume for Bitcoin is at its lowest readings now since September of 2023. So September, October was at 16, 17. We are now at 17. So we've seen 17 and 18. So basically at the same levels as it was 12 months ago before we had a very, very big breakout to the upside. And that leads us over to BTC, 6.5% away from a new all-time high, just $4,500. And I also hear the concern, which is a very valid concern, that, well, if everyone is bullish, shouldn't this thing turn around and correct? And I guess that depends on where you're looking, because there are still several people who are trying to short this market, looking at diagonals and trying to short diagonals. That's a possibility, right? We could see further downside from there. But the main thing is, for a period of time, you're going to see everyone bullish. That's what happened here. There's February. You can see this move up in February, March. Almost everyone was bullish, but prices were still going up. But what happens from that point, which takes weeks, sometimes months in the case of what we just saw, to wash out that market sentiment of everyone being right at the right time, could take months to wash out the price range from there. So you can see it went from 74 down to 49 and basically wiped out all of these late buyers. Everyone that was in from here and even got in a little later here and maybe even on some of these breakouts, they were all safe. But of course, these guys would be sweating it more than these guys back here. So do you want to be these ones or do you want to be those ones? Try not to be these ones here, because these ones are going to get wrecked once again. At least in this case, if you have been buying here from around 50 to 70, you probably have been thrown a lifeline, because I think we're going to see higher prices from here. So you've got a lifeline if you got into here, but don't be fooled. There's probably not going to be too many lifelines if you're buying above sort of, $80, $90, $100,000. These were some of the major signals that we've been following now for the last several weeks that give us a leading indicator for what potentially comes next. And just to throw the probabilities more in our favor that we would likely see further upside. We've seen the overbalance in time and price. We've seen the higher lows continue to form here compared to what happened last time. There's more and more lower lows. This time we're seeing more and more higher lows. We are seeing the higher highs also get broken, whereas before they were just coming up short, just putting in the lower highs each time. Then we had the weekly swing breaks. So we throw onto the weekly chart. This time there's the weekly top using the Gann swing indicator, and those are getting broken. Whereas last time you only had sort of minor weekly swing tops getting broken, right? So there's a bit of a difference here, and the diagonal downtrend. So I'm using the diagonal downtrend from the top to the next top here. So very specific points. So what about invalidations? Can this thing break down here and this just be another false signal to the upside? We'll be looking to any closes below around $65,000. That's this previous weekly swing top. And you can see the market also failed here, at least in the short term, back in September, where it broke above, gave us our overbalance in time and price, basically more buyers coming in for a longer period of time, pushing the price higher than anything that we saw previously. That is a very strong signal. I don't see anyone else using that signal. Basically, it's a bit of an early warning sign as well. And on top of that, we have our 50% levels. So if this happens to be a high here, well, the 50% is around 64K, but we'll have to readjust this in case price goes any higher. But for now, that's the top, 64,200, pretty close to 65K and pretty close to these other closes, weekly closes at around 62, 63K. So plenty of support if the market is to come back and find support there. If not, breakdowns from that low to mid 60s, that's going to be where things will start to deteriorate. And you could potentially think that, well, this time is wrong. This time is not going to be that strong move to the upside. On top of that, if I throw in a bit of volume, you can see that last week that just closed had increased volume. We're on Coinbase here, so a reputable exchange, however you look at it. There's a lot of people trading there, and that volume basically beats everything that we've seen going all the way back to August. On that August, you had 69,500, and then this week we had 66,500. So it comes back to test that particular one there, and we closed higher. So some pretty strong signs at the moment for BTC. Now, this particular pattern here is almost an identical repeat of what happened 12 months ago. You had a couple of lower lows and then a low here, and then I've got 1, 2, 3, 4 lower low, bit of a higher low, but very short term. You can see that the next weekly top was quite weak, and the same thing happened here. Very weak weekly top. Number one starts, then a move higher. Number two, number three, number four. Number two breaks lower. Number three higher. Number four higher. Number three here higher. Number four higher. And then we get this pretty strong breakout. That lasted, if last week was the start of it, right? It had 1, 2, 3, 4, 5, 6, 7, 8 weeks until it basically topped out. Somewhere around December. 1, 2, 3, 4, and then you got into that final week there, 5. So 8 and 5, about 13. That's about a 3-month move to this final peak here, correction, and then it kept going. If we measure all of those weeks from the low point to, it's about 6 months, so about 26 weeks. Where would that take us if we measure from low point 2, and how long do we have left? 26 weeks takes us out to about February, around my birthday, in 2025. It doesn't mean that the game is over and that we basically go into another 6-month drawdown and things like that. Maybe we find a move here and we basically pull back and start to climb again just to wash out the crazy greed sentiment that we're seeing in the markets. We don't know for sure yet, but what we can see is that this pattern is very, very similar to what happened 12 months ago. And from that point, that low to the high was about 200%. What if we do something crazy and just do half that amount from the low? Well, anyone can double 49. You get to 98, and we go take it out to roughly the same time frame. 98 into February. There's 26 weeks. That's not a bad start. But if you are getting in later, sort of your 80, 90,000s, if there is going to be a correction, that's where things start to get pretty concerning for you. To put it lightly, right? If you're sort of buying in late 80s, 90s, and then you see a correction, well, you'd probably be in a loss at that point. We don't know for sure where this thing ends. I'm just using previous data here, 200%. Let's halve it, say 100%, and then the move up from there. Now, I've got altcoins that I also want to look at, but this particular one here is just starting to break down as well. And as we've looked at with the USDT dominance, when this breaks down, you can see a lot of money flowing out. So it can be an early altcoin season trigger. So the USDT dominance hit those levels, lower high. The other one was the higher low, right? And the breakdown seems to be occurring right now. In the short term, it failed at 50%. We can get rid of that now. It's helped us. It's worked well. And if this happens, I suspect we'll start to see a lot more money flow out into altcoins and, of course, BTC as well. Now, the analysis is looking pretty damn strong, but just a quick mention to TIA members. I've got another video that I just put out earlier this morning. Check this one out after this video. This is looking at signals failing within signal. So basically a signal within itself, which can be extremely powerful. And I've gone into detail with some altcoins as well. So back to total cryptocurrency market cap. We're looking at the breakout now of the 50% level, 2.2 trillion. You remember this here, very strong above this level. And then it's breaking out of the weekly swing tops, very similar to what we talked about with BTC. And it's breaking the diagonal downtrend, some volumes coming back into the market. And this could be the early start like we saw back in October of 2023. Now, I draw your attention to these few weeks here with these arrows. We looked at this, I think last week or the week before, where the majority of the move happens in the minority of the time. For example, maybe 20% of the time, 80% of the move happens. So a lot of that action happens in a very short period of time. And the rest of the time, the market is building up to decide what it wants to do next, which is why it's important to understand some of these signals before those significant moves happen. Otherwise, you risk missing out on a lot of those gains. So it seems like we're at that stage again. You can see several of these signals coming through. Always important to have the invalidations, because at the end of the day, there are no guarantees in the market. And of course, the invalidations, the first ones begin at underneath 50%, so 2.2 trillion. More importantly, those weekly swing bottoms. So keep those ones drawn up on the chart, and of course, we'll review them on the channel as well. So in terms of the total cryptocurrency market cap, looking pretty strong as it continues to break out of these levels. Next resistance, 2.45, 2.6, and then the breakout into not new all-time highs, but a new fresh high, 2.7, before we get close to that new all-time high, which is basically at $3 trillion. So that takes me over to the true altcoin market cap. You want to get access to this. It's the total, it's TIA, total cryptocurrency market cap. And to show what I've got on the chart here, exclude Bitcoin, ETH, and stablecoins. So something that you can't do with the trading view indicator itself. So the breakout here is at 480 billion. Could be an early trigger sign for altcoin season, or at least that start where things start to rumble. And you can see many other alts are looking like they also want to break out to the upside. So we got the higher lows, we've got the weekly beginning to break, and then the 50% level also coming through here at 480. So look around that 480, look around this top here at around 510 billion, as it's very similar to the last time. We had the tipping points, basically that breakout point where the market goes a little bit crazy. And at 101 weeks, not saying it has to be 101, but around 2 years from the cycle low, that's where the altcoin started to pull back for a month. Mind you, this could pop this week or next week and then pull back for the month of November into December before you start to see things go crazy. If that's the case, well, let's have a look. 100 weeks from the low takes us out to the first week of December. So we're getting pretty damn close to a similar time frame where things began to pop. 480, 500, roughly around 580 because that's the 50% level, and then your 650. Big tipping point there at 650, as that was the previous top that we saw this cycle, swing top back in March 2022, and then it doesn't really leave much room to get to that new all-time high. So things could get a little bit serious here over the coming weeks. If that's the case, please, for the love of whoever you pray to, do not find yourself in situations like this. Sorry, ADA holders. I pick on XRP all the time. They think they're still going to make it. But this is what it looks like in log. This is what it is in linear. Cardano has broken. This is not just my opinion now. It broke to new fresh lows against BTC. This doesn't mean that it's got all this great upside to come back and then take out and, we'll show you blah, 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 that sort of shit. It's a very, very weak crypto for this cycle. Maybe next cycle, different story, but this time very, very weak. And another thing, it's getting very close to breaking down from the December 2020 low, if it hasn't already. Yep, just a couple of ticks off, and then breaking to new all-time lows. That's something that you do not want to hear or see in your portfolios. So enough on the worst. Let's have a look at some of the best in the larger caps. Sure, you can get onto memes and all that, but you're seeing breakouts here for Solana. 1, 2, 3, and this is our 4th time breakout. Above 50% levels, $152, $138, and now at $170. So reasonable strength here coming into Solana. And of course, there's a lot of meme coins on Solana, so it could be an easier play here if you don't want to get all involved in all of the memes. Solana is probably going to do good things if memes are also going up in price. So pretty strong there, which also would suggest that ETH could do okay, but maybe not as well as Solana. And in this case, we're looking at ETH USD getting close, finally, to getting past the $2,900 resistance level. So that's going to be a big one for ETH. And so what I'm saying there between the two, you can see one is weaker than the other. ETH is weaker than Solana, but both of them will likely go up. So that's a difference that you want to make in your own portfolios. Which ones do you want to be on? Which ones do you believe in? I personally believe in the charts, and until the charts say otherwise, you got to respect that Solana is stronger than ETH. It is breaking out into new all-time highs against ETH. It's basically putting in bigger gains, stronger gains than what Ethereum is doing. Things can change, of course. Hopefully for the big ETH bag holders, they do. I hope they do for my sake. But nonetheless, that's why we've got to be on board with all of them and continue to follow up on each of the charts. As always, I've gone through a ton of charts in today's video, so make sure you hit the like button, subscribe to the channel so you don't miss any of the day's analysis. There's a flash sale on TIA Premium this week. Subscribe to the free report and you'll be notified in your email inbox very, very soon. Things are heating up, but the majority of people are still not in the market, as we can see from the data that we reviewed in today's video. I'll see you back here on the channel for the next update. Until then, take care and peace out.